Hi, can everybody hear me? So I am going to wait a few minutes for everyone to come in. I wanted to do a sound check. Can you hear me? Just put the number one if you can hear me, please. Perfect. So I want to welcome you guys. I am waiting for a few more minutes for people to come in. I would love to know how many people here are actually already starting their own business or just here to get more financial information to continue their existing business. So, how many of you guys have your own business? And if so, how many years have you been in business? All right, let me pull up my slideshow on the phone and then I am going to get started. Awesome, Joanne. 4 years. Hi, welcome. I just saw someone just enter. So the reason why I wanted to do a webinar specifically about finances is because as small business owners, the concept of having financial literacy, the concept of having a financial management system is so important and so vital for the survival of your business. So I wanted to do something that was almost like a basic level, entry level to doing your own financing. And, the ultimate goal is to be your own CFO. And that is the impetus for this webinar, is just to make sure that we just go over the basics on running your own business and making sure that the financials are tight, especially if you are new to business, and the whole idea of commingling and the whole idea of using business accounting softwares like QuickBooks and Simple Start FreshBooks, just giving you a baseline for moving forward with your business and finance. So just a little background about myself. So I am a formally trained engineer. I have an engineering degree from Penn State. So math and statistics are like deeply ingrained in who I am as a professional, and it's just, it's my thing. So whenever the conversation comes about money or finance or spreadsheets, like that's my thing. So in business, I have, I'm using the left and the right side of the brain. So I love the creative side of it, but then I also love my spreadsheets. I love statistics. So it's been a good balance for both sides of the brain when it comes down to running my business. And if you followed me before, I've had a business before Petite Seats and didn't do well in profit and financing because I ran it as if it was a hobby, not so much a business. And I commingled, I spent so much money unnecessarily. And so when I began Petite Seats, I did the research to how to run a business and be solvent and be profitable from the very beginning. So that's what the impetus for this webinar is. So I'm going to start. with going over the objectives. So I'm a teacher, and the SWBAT is students will be able to. And the first thing is describe important financial issues about small business. So we'll get into that. Number two is to identify essential financial skills required of a successful entrepreneur. Number three, examine the role you play in the financial health of your business. And then number four is identify basic accounting principles. So those are the things that I hope to accomplish with this webinar. All right, let's go to the next one. So I'll start by going over the 5 numbers you should know and how to calculate these numbers, what an income statement is, and I'll show you examples of a sample income statement. Bank accounts, we'll have a discussion about bank accounts and how to set up bank accounts so that you see a profit. We'll talk about commingling and the idea that you can be your own CFO. Even if you're working with an accountant, there are steps that you need to take as the business owner to prep and do the legwork for your accountant. And then we'll end the conversation with taxes. So the why. All small businesses need to know the basic concept of financial management to operate a successful and profitable business. So I often see or have conversations with people that have the creative side down. They do well in creating beautiful events, creating beautiful pieces that they're selling to people. But when it comes down to the back end of the business, the finance, the managing their money, it's like, in shambles. So it's very hard to see a profit and to see how well you're doing if you don't know your numbers. So that's what we're going to start with, knowing what the numbers are, what numbers are important for you, and how to calculate those numbers. So knowing how to handle your finances properly will give your business a fighting chance to grow and survive. So we often hear people that are in business and they start, everything looks great. The front face of the business is beautiful. But on the back end, in order for them to grow and have longevity, you have to have your finances tight. They have to be in order. So I have been in business with this business for 5 years. And from the very beginning, I told myself that I don't want to get into bad debt or debt generating income by just taking events or parties that I know that they couldn't sustain what level of quality of service that I'm trying to provide. So I started off by having a pricing structure that would ensure that I was able to make a profit and break even with all of the inventory that I was purchasing. So in order to do that, I had to know and first I had a conversation with my accountant about what it is that I could do on my own to make sure that he was able to facilitate, making sure my finances are together. And these are some of the things that he explained to me that I can do as my own business person and being that CFO. So these are the 5 numbers that you should know and how to calculate them. So we start with the gross revenue. Then we have expenses, net profit, cash flow, and break-even point. So let's see what those are about. So your gross revenue is basically the sum of all the money you receive. So whenever you have an invoice that's paid, cash, credit, whatever it is, that will be your gross revenue. So all the money that's coming into your account that people are paying you for the services, that is your gross revenue. Then, of course, we have expenses. So that is anything that keeps your gross revenue from going directly into your pocket. So those are the things like the cost of doing business. So when you're buying supplies and materials, when you are paying for utilities, it's a whole list of things that you can classify as expenses. Then we have net profit. So basically what you're doing to get the net profit is you're subtracting your expenses from your gross revenue. And that would be what's left is your net profit. So what is left over after you debit the expenses from your gross revenue? And people like to call that your bottom line. Cash flow is the difference between the available cash that you have at the beginning of an accounting period compared to what's at the end. So I like to, and I'll go into this later, but I like to look at my cash flow twice a month. So I'm still working a full-time job. And what I do is on the 1st and the 15th is typically when I check out my bank account for the cash flow, and I calculate these different things that we'll see in the financial statement coming up in a few slides. The last number that you should be aware of is your break-even point. So when your total revenue equals the total expenses, you've broken even. So that is the point in your business when you start to see this profit. So these are two definitions for an income statement. So the first one is very generic. So an income statement directly shows whether the business has a net profit or a net loss. So in sum, it takes all the revenues and subtracts all the expenses. So that's like the very basic definition of an income statement. And then, of course, you have the more complex definition that considers the different types of numbers and then when to take or when to calculate these income statements. So an income statement presents the results of a company's operations for a given time period over a quarter, over a year, over a month. What we'll be looking at is for a month. The income statement presents a summary of the revenues, gains, expenses, losses, and net income or net loss of an entity for that period. The statement is similar to a moving picture of the entity's operations during the time period specified. Along with the balance sheet, the statement of cash flows, and the statement of changes in owner's equity, the income statement is one of the primary means of financial reporting. The key item listed on the income statement is the net income or loss. A company's net income for an accounting period is measured as follows. So your net income is calculated by subtracting your expenses from your revenues plus adding the difference between your gains and your losses. So that sounds like a whole lot of mumbo jumbo, but let's look at it in a actual income statement so you can see exactly what it is that the numbers say. So we're going to spend a little bit of time here. So this is a sample income statement. So what you see right here towards the right is, if this was on the statement, this will be above the chart. So it's the income statement, it's the company name, and it's for whatever time period you're specifying. So I do this every month for my business. And you can do it bi-monthly, you can do it per quarter. However you tally up your income statement is up to you. I like to do it every month because it lets me know almost in real time where I'm at per quarter. And then I track it to see how I did, like say this July versus last July or the July before, because what I'm looking for are trends, and what I'm looking for is a growth in year to year. So we start at the top left and you see the operating income. So I have rental sales, e-commerce sales, table sales, event planning sales. So under that operating income, I'm listing all of my streams of income. So whatever I'm doing that's making me money, that is what I'm listing under operating income. So for the time period, for the month of July, these would be what you see listed, the 7,500, the 550. Those are how much I made for that month for those specific income sources. What you see to the last column, the year to date, is how it compares to what I've made for the entire year. So from January to June. So after you've calculated the operating income, you add them up and you get the net sales. And the net sales is just the sum of those four streams of income. And that came to $11,550. And what I want to subtract from that is the cost of goods sold. So basically what that means is, especially if you are a creative, somebody who does like stationery or anything that you have to buy materials and you're spending time and labor to create your product, this is what you're calculating in the COGS. So you would subtract that from your income, and that would give you the gross income. So what you see here is I'm subtracting the 11,000 from the 5,000, and that's how you calculate the gross income. Under that, you have the operating expenses. So of course, this list will be much more extensive. I did it small so it could fit on the slide, but you can have 20 different sources of expenses. It doesn't matter. However many expenses you had for the month is what will be listed here. So what I've listed only are the advertising for the month of July, the bank fees, the auto motive and mileage, so that's gas, things like that, any repairs to the vehicle, and then my insurance. So once I add those up, I get the total operating expenses, and that came to $1,675. Now, how you calculate the net income before taxes is you're subtracting your gross income from the total operating expenses, and that gives you your net income before taxes. So I like to see that in terms of where I am for the year to date and then for the current month. So it's almost like a running tally for the year to date. And you're able to see where you are each month as far as breaking even point, or if you are doing more expenses than you have income. So this is what I like to do each month because it lets me get a quick snapshot, a quick picture of where my business is, and if I need to rearrange stuff or if I need to spend less on a certain thing. So when I go into deciding to purchase a new chair or some kind of new inventory, I first check to see that my income statement is showing more income in relationship to my expenses. And then I make a determination. My question to you guys is, how many people have some kind of software or do this by paper or Excel? They do an income statement. Put a number 1 if you do, or put a number 2 if you don't. Awesome. So the next slide that I'm going into is speaking specifically about bank accounts. And the way I like to think about it, you have to choose a bank that's going to give you the least amount of fees. So, you have the big banks like Bank of America, TD Bank, and these other larger banks that they have a fee for everything. They have a fee to maintain if you go below your threshold for a certain monthly amount deposited. They have a fee for ATM fees, a lot of fees. So when it comes down to my business account, I have a bank, I bank with a credit union because the fees are much less. Now, in my credit union, I have one account, but I have 4 different savings accounts under I have one checking account and then 4 different savings accounts set up in my business account. And this is why. Now, some people may think it's excessive, but this is how I break down my money when it comes in. And I do this twice a month, and I'll explain that process in a minute. So when people pay an invoice from my Square app, it goes directly into my main checking account, my business checking account. And in this business checking account, I use that as the operating expenses account. So that account stays as it is. On the 1st, or you can say the 30th and the 15th, so twice a month, I move money according to the percentages you see here. So all the money is in the pot in the checking account, and then twice a month, I will move money according to these percentages. So for operating expenses, that stays in that checking account, 38% of whatever's there stays in that checking account. And then I move 35% into my taxes account, which is the savings account number one. Then I move 27% into my owner's compensation account. And then I move 25%. I'm sorry, 25% is actually owner's compensation. So that is the account that actually goes outside of the business savings and goes directly to my personal bank account. So that's how I'm paying myself. Profit is 2%, and it goes into the second savings account. So you have taxes, 35%, operating expenses, 38%, profit 2%, and then owner's compensation is 25%. So let's say 1 month where I decide that I'm going to make a huge purchase, and I look at my operating expenses account, and I realize that I don't have enough to cover the bills, my expenses, my normal expenses, and also purchase whatever it is I say I need to purchase. So what I do in that case is I leave all of the other accounts the same, and I go into my owner's compensation and I lessen that 25%, because I would rather pay myself less for that twice a month than to break up, the other percentages that I have divvied up. So I never touch the taxes. That's there because I know that as I'm growing in business and I have to, and I'm making more money, I'm going to have to pay taxes on what I've received. So I leave that tax percentage, that 35% alone. I never touch the profit account, and unless that's the savings account that's like emergency finances for things that I don't even know. I haven't used it yet. But that 2% stays as it is. And so my operating expenses and then the owner's compensation can fluctuate depending on what the situation is. You guys have any questions about this, the bank accounts? My next question is, how many of you guys have a separate business account that's a different account from your personal? Whether it's a credit card or a debit card, checking account, do you have a separate bank account? So yes for number one, two for no. So let's go into this idea of commingling. So what is commingling? Commingling is when you are basically treating your business funds as if it were your own money. So you're purchasing groceries for the house, you're buying kids' school clothes with your business money. And I'm putting quotes around that. So this is the idea of commingling. So here are some ways that you can commingle funds. So if you are making bank deposits payable to your business from a client, and you're depositing it into your personal account. So that will be something you shouldn't do. That's commingling. If you're making withdrawals from your business checking account to pay for personal expenses without documentation. So for instance, if you have that student loan bill and you know that you don't have enough to cover it from your personal bank account, and you use your business checking account to pay that bill, that would be an idea of withdrawing money from your business account to pay for a personal expense. If you're depositing personal money to pay for business expenses, that will be an idea of commingling. If you are using the same bank account for business and personal, that's the biggest thing I see. If you're writing business checks for personal expenses, so that's the idea of paying for the kids' school clothes with your business money. If you are using a personal credit card for business expenses to get points. And then the last one, if you're moving money back and forth between your business and personal accounts without documentation. Now, of course, that without documentation means that you're just doing it, but there's no valid reason, no valid business reason on why you're doing it. That will be considered commingling. So the idea is just to say no to commingling. So you want to separate your business and personal finances because it limits your liability. So if you're commingling funds, you lose the liability protection that you fall under when you're LLC due to what they call piercing the corporate veil. So what you see over to the left, there are reasons why, I'm sorry, um, you should not mix business and personal finances. So one, it doesn't look professional when you mix. If you're trying to establish a business credit or get a business credit card, you need to have a separate account. When you're doing bookkeeping, it's very hard to try to decipher what was personal and what was business when you have one bank account. So it's much easier to do bookkeeping when you have a separate business account. And then just for delegation. So we all want to have businesses that are growing and flourishing. And if you may get to a point in your business as you're growing where you want to be able to just run your business and you hire a business manager or an accountant to do all of your accounting. So in order to sign off authority for your business account to the bookkeeper, you have to have a separate account. You don't want that person to be aware of your personal finances. So having a separate business account will be a must so they can handle the day-to-day transactions. So those will be like advantages of having a separate account. So you have a business and you want to know what it is you need to do in order to get your finances together. So to be your own chief financial officer. So here is a brief accounting checklist for tasks that you can do daily, tasks that you do weekly, and tasks that you do monthly. So what you should be doing every day is review the status of your cash. So basically, if you are having an active business, you want to look at your checking account balance to see what's going on, that you have some kind of cash flow and you are monitoring how much is in that account. You want to open your mail. So you get something, you get a bill, you want to make sure that you're well aware of who you owe and whatever is happening as far as checks and balances for your finances. You want to organize and file receipts. I think for me, that's the hardest part because I do everything by hand. I don't use an accounting software. So you'll see me with a little like pocket folder that you typically put like receipts in. That is what I put that's how I file I'm not receipts, coupons. That is how I file my receipts. So you want to organize and file those receipts that you have. And then you want to record all transactions. So you're doing this daily. On a weekly basis, or bi-weekly, you want to pay your bills, you want to send out invoices, and this can be done in real time. So as you get an inquiry, you want to send invoices. You want to review your cash flow, and you want to look for the bills that are unpaid and then unpaid invoices. And you want to post transactions so expenses are recorded and cash is counted. You want to basically keep a running tally using that income statement of where you are financially. And then finally, you want to check and categorize all expenses. So if you're using your online or digital bookkeeping series or software, you can upload your invoices and upload your receipts. And then on a monthly basis, which is what I just showed you with the income statement, you want to balance your checkbook. You want to pay and check your credit card statements for inconsistencies and just make sure that everything is as it should be. And then you want to review overdue items. So that's things that you may owe and also any overdue invoices. And then you want to review your inventory if you have inventory, if that's applicable. You want to review your income statement. So basically you're matching your income with the invoices. And then back up your accounting software if you're using something like QuickBooks or FreshBooks. And you want to review total income, expenditures, and your net for the month. So like I said, I do that bi-monthly so that I can take out those percentages. And then lastly, you want to transfer funds to the respective accounts. Again, I do that twice a month. And you can do this once a month if you are not doing so much business within 1 month. But because my sales are so rapid, I have to do it twice a month, because otherwise, if I wait to the end of the month, it's just cumbersome. All right, so next we're going to go into taxes. And basically, the idea is you can't deduct what you can't document. So if you don't have a receipt or invoice for something, you cannot deduct it. So it's like you have to have proof of everything that you are using to file your taxes. So what I have here are just the quick things, more in line with what happens when you get audited, but it's things that you should consider or think about when you're dealing with business taxes. So the first bullet is the business account is not required if you are a sole proprietor, but it is easier to see all of your business expenses and incomes once this account is separate from your personal. So basically, if you are not really doing a lot of business and you're calling yourself a sole proprietor, you don't necessarily have to have a business account, but you can still have a personal account. But just for all intents and purposes, it's much easier to account for business expenses when it's a separate account. So having a business account will also be extremely helpful in case you're audited by the IRS and have to show all your business expenses and incomes. You can also prepare financial statements, which are easier, and keep track of your deductible expenses. So that's what we just went over, that income statement. That's one of the financial statements that will help things go smoothly as you are presenting things to your accountant or if you're doing your own taxes. So the general rule is that the IRS has up to 36 months or 3 years after your tax return is filed to audit you. So you have to make sure that you're keeping records of everything that you're deducting or everything that you're filing or claiming in your business taxes. And then finally, your income to deductible ratio should be reasonable and supported by accurate records that you will maintain as you incur the expenses. Once your expenses and deductions start to increase significantly more than the gross income, then it's likely that the IRS would want to audit you to determine whether the deductions are legitimate. So this is something that I'm dealing with right now. So when I began business, I always operated at a loss. This is truly the first year 5, where I'm seeing so much more income that far exceeds my expenses. So I am now trying to get that taxable income down. So I'm making purchases, I'm taking more trips, I'm doing things to have more deductions so that I can file. So actually my accountant can file that income to deduction ratio and make sure that I'm able to pay less tax, so to speak. But this is something that you have to have a conversation with a professional, with an accountant, and they will tell you what to expect and what's allowable deductions and what aren't. So that's what we're going to look at next. So in the next slide, it's going over the idea of an LLC. So I know many people, they're considering registering their business. And for me, I have an LLC. And basically, you're thinking of an LLC as a hybrid between a corporation and a sole proprietorship. An LLC can be taxed like a sole proprietorship should you choose to, and provides the same limited liability that a corporation does. They are simpler and easier to run than a corporation. So when I decided to, so to speak, register my business, I decided that a corporation, an S Corp, it was just too complicated. I didn't need something so complex. So having an LLC was the way to go for me. And this is why, because it gave me that flexibility to still, as I was small, decide whether I wanted to have that separate bank account or not. It gave me that tax incentive to deduct things and do that Schedule C. And also it offered me that limited liability in the business. All right, so let's look at these deductions. So I'm sorry that this is so light, but these are the top 20 employee deduction sheet. So when I transferred in this thing, it cut off some of my things, but the top 20 things that you can deduct. Now, I know many of you have been doing taxes or filing your taxes for years, so you probably know a lot of this stuff. But the top thing is not so much the top, but advertising and promotion. So whenever you do like a Facebook live, a Facebook ad or an Instagram ad, that would fall under advertising and promotion, and you can deduct that. Business licensing and permits, home office expenses, dues and subscriptions, legal and professional fees. So whenever you have a consultation with someone, like I just paid about I think $600 to do my trademark application. So all of those fees would be deductible. Travel for business, meals and entertainment for business, consultations, bank fees. Now, this is a huge one because for whatever reason, if you have, especially if you have a business credit card, I have Amex and they have annual fees that are expensive, that's deductible. When I use, say, if I'm traveling and there's an ATM fee that I have, if I'm using the bank machine that's not my credit union, that's deductible. Late payment fees, all of these fees, these bank-related fees and credit card-related fees are deductible. Auto expenses and mileage for business are deductible. Education. So initially, this webinar cost, if it was still a $65, this would be a deductible expense. Any online courses, ebooks, or workshops you attend or purchase, they are all deductible. Gifts given, professional gifts given. So that would be $25 per year per person. Insurance. Subcontractor. So for my company, my rental company, when I hire somebody to do deliveries for me, that is a deductible expense. The cost of goods sold. So we talked about this in the income statement. So whatever you're spending for materials and labor, that's deductible. Equipment rental, deductible. Office expenses. So that's postage, supplies, equipment, deductible. And rent, if you have a physical space, deductible. And of course, utilities that are associated with your business. All of these are deductible. So next, we're going to talk about the most popular online softwares that people use. And again, like I said, I don't use this. I do everything paper and pencil with like a ledger. But the two most popular would be FreshBooks and QuickBooks. So FreshBooks is ideal for businesses who are service-based and they have simple product offerings like digital products. They are for freelancers or creative services that invoice clients as a project is needed. Businesses who receive deposits and regularly invoice clients over email. Those who are not as comfortable with making accounting or journal entries, the interface and dashboard is more straightforward and user-friendly for non-accountants. So these are for the people that just want to dump it and go. FreshBooks would be the ideal source for you. It's not so cumbersome and labor intensive. So let's compare that to QuickBooks, which is very, very popular. So QuickBooks is more ideal for the product-based businesses like e-commerce driven, people who have Etsy stores or carry large amounts of inventory. Businesses that have a higher volume of transactions, businesses who require slightly more robust reporting tools. QuickBooks has more reporting options and a higher level of report customization. And then finally, those who have some basic accounting knowledge. So these are the people that understand what an income statement is, what a break-even analysis is. These are the reports that you can pull from QuickBooks. So finally, the whole idea is to maintain thorough records to help you track your business performance. Like you want to know where your business is financially at all times. Make informed decisions, especially if you're purchasing inventory or you just want to know where you stand in business. If you want to get accurate information, say if you're applying for funding, to keep within a budget, to comply with tax regulations, and then to track and dispense payroll. So those would be reasons why you would want to keep thorough records. And just overall, you need to, when you're in business, you're doing it to create a profit, to make money. It's not just a hobby. So you have to understand where you are financially in order to show growth, in order to show profitability. So that's just one of the reasons why having an income statement generated each month or bi-monthly is so crucial for the health and growth of your business. So are there any questions? So that's all I have for today. I thank everyone for coming in. This is my first webinar. It took me forever to try to figure out how to share my screen with this, but I hope that you guys were able to get some kind of information that can further help you with business. I'll have the PowerPoint available if you would like it, and I'll also include links. If you've registered, I'll send off links for an income statement template. Are there any questions? Well, I thank you guys for coming in and joining, and have a wonderful evening.